Well,
Yeah, so
anybody
for the
that
most part, yeah, and that's a great question because as a trader or a swing trader or even as an investor, it's so important for us to kind of think outside of the box because when any one side becomes too big in terms of hearing that narrative and only that narrative, it tends to draw us in and we really want to stay independent to really see what the truth is, right? And so for me, it's looking at the charts and the charts are the clearest, most precise way to get through the noise into reality. And so, for instance, if we look at the Bitcoin chart here, I don't know if you can pop it up, but one of the things that I love is that Bitcoin actually showed us that a mini breakout was going to come in, right? So you have this pivot high, which was your FTX high pivot, down to this high. And you could see how price was kind of going here. It crept above, paused, kind of retested that line, and then it's gotten this little bit of a bullish move. Now, as soon as we get the first bullish move, we start hearing about, oh, the bottom's in, we're going to go to new all-time highs in 3-6 months. In reality, that's not what it's telling me, right? So this is a short-term bullish move, which is inside of a bear market. But the biggest thing to me is this high pivot right from the FTX collapse. So if price were to get above that, like let's say we do have an incredible bull run and we take out this psychologically significant high, which was when FTX collapsed, then to me, now you can talk about the potential for a low is in and maybe a new bull market is on the verge. But as long as we're inside of this is a classic bear flag pattern, right? So, you basically take the drop and this inside chop, and that's bearish overall. So again, it's just the purity of the charts where you can have these little intra bear market rallies, but until significant pinpoint levels are taken out, you have to be in the camp that we're still in a bear market. That means Bitcoin and crypto is vulnerable for more downside, and you want to be protective against that. For me, I mean, the trend is your friend until it isn't, right? So, I mean, you have to continue to go in that way. As traders, we just have to be very aware of when the trend changes. So for me, if price were to eclipse this big move down, that would be a potential trend change for me. But for me, there's a couple things that I worry about with Bitcoin and why maybe it hasn't quite bottomed yet. Number one, in past cycles, in bear market cycles, prices dropped 80+%. We haven't dropped that much yet. We're getting close, but we haven't dropped that much in Bitcoin's price since the all-time highs in 2021. And then I think you have to look at it and say, here we have the Federal Reserve, and this is the first cycle bear market where Bitcoin does not have printing money going on. And so the question is, does that mean the bear market low is going to be less or more of a downside move? And again, to me, it would make sense that it would be even a little bit worse because the Fed is not printing money. And again, one of the things that I'm really keen on is if we can get regulation in the space. I know a lot of people don't want regulation, but I think after you saw what happened with FTX, you need transparency. Then I think that could be a catalyst for the next bull run leading into the halving in 2024. And bigger, yeah, you have bear markets where we'll see, a 25, 30, 40% move down. But the more mature, the more investors that a market has, the corrections are usually smaller. Even if you go back to 2008, 2009, the Great Recession, which was a horrendous collapse in the financial system, the S&P only dropped 66%. Mainly, again, it's a mature market. So I think there's something to be said for that Bitcoin is maturing, and it's going to draw more interest from a larger group, and then ultimately they could be in a position to maybe not correct 80 to 85%. So my view is somewhat on the more bearish side for the S&P 500. And one of the reasons is you can see on the weekly chart, but even more so on the daily chart, is that, as of now, we still have this downsloping trend line, which is keeping price in check. And then after this most recent fall, we've seen kind of a bearish flag pattern start to develop. Obviously, markets have had a big move up here over the last couple trading days, but we're coming right into this trend line here. And if you basically look at this, right, so you had this scenario where you popped up, you fell into that level, then you went up here, you hit it again, you went up here, and then you broke through. And there's a tendency for markets to retrace to what I call the scene of the crime, which is that trend line before the next leg down. And so as long as we stay within this pattern, this would be, again, a bearish pattern with then a target price of that yellow trend line, which we actually got really close to on the S&P today. And I'm in the camp that, looking at the macro picture, there's no doubt that the economy is slowing down. The jobs numbers have still been booming very strong, but we're hearing about layoffs every single day from the likes of Meta and Amazon and Google and Microsoft. And at some point, that's going to filter into the macro and really cause a recession, in my opinion. So I think that are going to need to be taken down, which means prices of those companies, of those stocks, have to come down. So I actually think I've gone on record saying that I think the S&P will at one point be down as much as 25% in 2023 from where it opened. And, it's one of those scenarios where I think the Fed is really missing the boat by tightening too much. Absolutely, they have to get control of inflation, but at the same time, they're over tightening too quickly, which is then going to probably spin us into a recession.